Welcome into a brand new episode of WSI TV. Enjoy the show.
Welcome back into a brand new episode of WSI TV. I'm Sean Bauer. With me as always is Jordan Bishop. And today we have a special episode. One of the things we want to highlight right now is the countdown to your $2,000 cash back. Executive producer Jim Sampson is putting this on against the best wishes of our accountant, against operations director Mark Edwards, who is furious lately actually. So do you want to go ahead and explain what this is all about, Jordan?
Yeah, definitely. And I just want to give you a little feel of what's going on in the office right now. Everyone's furious at Jim Sampson. I mean, he is a very creative person. Everyone's yelling at him saying, why are you giving out $2,000 to all these people? I think it's up to 200 people that are going to receive $2,000 cash back. So everyone's, it's a little tense here right now, but it's all good fun. And I mean, we want to provide you with the tools you need in order to reach your financial goals. And that's how committed Jim Sampson and both Sean and myself are to getting you there. So basically, any of our products that you buy from now until 11:59 p.m. on October 31st, you will get every single dime back to do with as you please. And I think the whole focus today is, being handed $2,000, it's quite a lot of money to some people.
Yeah.
It's hard to know what to do with. A lot of people will just go out and spend it on whatever they want. But there's a very smart way to invest it. There's a very specific way to invest it. And we're going to break down this portfolio that's going to show you how to retire on our $2,000.
Yeah, we'll get to that in just 1 second. The only thing we have to mention now, Jim, of course, is doing this countdown to your $2,000 cash back. So anything you buy up to $2,000, he is going to explain how you're going to get all of that cash back. He's going to explain that on November 1st. So you'll find out then how this money is going to be back in your pocket from all of this. But like Jordan was saying, now that we have this extra $2,000 in our pockets, we want to get to retirement, right? That's what the end goal is for everybody. So we're breaking down this $2,000 into kind of the perfect portfolio for right now. This isn't how you always want to have it, but whenever we have the market the way it is, the economy the way it is, we're going to break this $2,000 down into a few different investments, and this is how we want to plan it right now ourselves.
Yeah. So again, in a bull market, like Sean said, in current market conditions, this is how we would do it. We would start off, and we go on and on about this all the time. You want to have 10% in cash. That would be $200 of the $2,000 you could receive back. So $200, 10% in cash. Cash doesn't move as volatile as stocks, as other money markets.
Right.
Cash is always there. It's physical. I mean, something drastic would have to happen for cash to disappear. Right. You might read about conspiracies about going back to gold, but cash is going to be there. Stuff it under your mattress if you want, but $200 out of this $2,000 in cash is what we recommend.
Yeah, exactly right. I'm sure you're tired of hearing it, but cash is a position. We say it over and over because it's real and because it's useful. The second thing we're doing with this $2,000, we're putting 20% in metals. Again, gold, silver, whatever it may be. I know we're both fans of those two metals specifically. Kind of the basis to the entire metals group and to commodities in general. We're putting 20% into metals, and this can be with ETFs like GLD that follow gold. Could be silver miners. I think SIL is an ETF for that tracks silver miners specifically. However you like your own individual taste for gold and silver or whatever metal you like, we're definitely putting a nice little chunk of that, $400 here of our $2,000, which is 20% into metals.
Right, and if you want to go the old-fashioned way, you could always buy physical gold and physical silver. $400 worth of that. Again, keep it in your safe. Under your mattress might be a little awkward with your cash, but you could also buy the physical metal. But it is easier buying the ETFs. So however you want to play it. But the next thing we would have is we want to put 20%, another $400 in a market tracking ETF. Now this is an exchange traded fund that tracks the market. Again, in a bull market, this is what you would want because the market is obviously going up. There's various ETFs you can invest this money in. I would recommend staying away from anything leveraged because you're gonna, as you'll see, you're gonna hedge this, but you don't want anything too volatile. You just want some sturdy growth. So any ETF that tracks the market is good for you.
Yeah. So Jordan has basically given up on his final note because it always used to be the Dow Jones, the NASDAQ is hitting brand new highs. It's continued to do that. We've literally just gotten tired of saying it. That's this bull market condition right now. That's why you have 20% in a market tracking ETF, just a tracker fund. So when the market goes up, your money goes up alongside it. Again, I would take Jordan's advice. Maybe nothing that's actually leveraged, like we talked about before for this particular portfolio, but a nice big chunk of 20% in a tracking ETF. It's just going up alongside the market, which has been flying for a year now. Then we move on to the hedge position, which is kind of the flip side of this coin. Now we have a smaller amount, half of that, it's 10% we're putting in this hedge, but it's, we're actually just barely past the anniversary of Black Monday when the market fell 20% or so in a single day. That's why you have this hedge position. There's always something that could basically go wrong, for lack of a better term. The North Korea fires a missile at us, actually. Something happened in North Korea, something anywhere happens, the market takes it wrong and goes straight down in a single day before anybody gets to react. That's why you have this hedge position that's going to go, this will skyrocket as the market goes down.
Right, you want to look at it like a seesaw, Right now we have the left side of the seesaw is high, right? We have all our other positions, our cash, our metals, our ETF that tracks the market, and our stocks, which we'll get to, up high on this high level right here. On the other side, we have our hedge position. Now, when this comes down, the hedge position comes up, and that means that you're going to profit even when the market's coming down. Now, in a bull market, we have the 20% in the market ETF and the 10% in the hedge. As we'll get to, if we ever see another bear market ever again, that would flip. But for right now, 20% in your market tracking ETF, but we do recommend having 10% in your short position in your ETF that tracks the opposite of what the market's going right now.
Right, there are plenty of reverse ETFs out there. We've spoken about a bunch of them, SDS, SP, XS. Those are some leveraged ones, but they basically go up when the market goes down. So there's no short selling that you have to involve in that. Just buying these reverse ETFs will do the job for you. But again, we are in this raging bull market. You never want to go against the trend, except for, of course, having a small hedge position. And whenever you're doing that, when you're in a market that's just screaming straight upward, you want a ton of your cash in stocks. We have 40% here. That's $800 of this $2,000 portfolio we're putting in stocks. And what we have been doing with our premium recommendation services, all these stocks are just flying right now. We have remarkable records with some of the things like High Flyers Hotline, because the market condition and how much we're putting in stocks right now, which we have at 40% here.
Exactly, and the beautiful way this ties in, your 40% stock holdings, the nice way this ties in is that, you're gonna get back all your money that you spend on our products, but these products we're giving you, as well as our episodes we do for you, they teach you exactly how to trade stocks. They show you the high flyers, the stepping stocks, the stocks that run with the moving averages. We all have specific names for them within our products, which I'm sure most of you know. But the services paired with our free episodes will really show you exactly which stocks, the exact tickers you need in order to fill this 40%. And as Sean was saying, we're in a raging bull market right now. No bear in sight. No correction in sight. Even it's been a very long time since we've had any sort of a correction. November 7th was actually the last real correction, during the election. But you want to be in stocks right now. You've got too many stocks to pick from, but it's never a bad thing having too much to profit from.
Yeah, it's almost too simple at this point. Be in stocks while the market's flying up. Your stocks are flying up. Your money is flying up. And it's basically as simple as that. But again, we are still running, just a reminder, this countdown to your $2,000 cash back. Again, Jim Sampson is going to pay you back up to $2,000 for the products you buy. In the rest of October, he's going to show you how you're eligible, how he's going to give you that cash back on November 1st. So be on the lookout for that. But in the meantime here, we'll have plenty of WSI TV episodes coming straight to your inbox. But for now, on behalf of Jordan and myself, we'll say thank you for watching, and we'll speak to you next time. Cheers.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com, where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.